A few years back in terms of trying to help out. My whole thing is my dad taught me how to trade. He was a pit trader on the CBOE and the OEX. He traded his own accounts. He was a local there for 20, 25 years, whatever it was. Owned his own seat and all that, and transitioned to screen trading and helped teach me for many years before he finally moved on and just got into his now late passion of a lot of bridge playing. He's a master amateur bridge player, like top 100 in the country or something like that. But so I'm here to help anyone that I can help, anyone that I can give extra perspective to. My whole thing is that I was so lucky to have my dad and to be able to kind of have that mentoring service from him without, paying an arm and a leg. I've certainly paid an arm and a leg in terms of, paying your tuition in the markets. So don't get me wrong about that. The hope is that we don't have to do that new traders, younger traders can learn and be better than I am, quicker than I am, without having to go through that kind of tuition process and pain process, and without having to pay, a lot for different education and mentoring services. So I'm just here to help. I'm here to help promote pit bull traders. I'm not an owner of pit bull or anything like that. I'm just a trader and an affiliate and a member of the community, and am thankful for all of you and thankful for all of the folks in the I Am Pro room and everything that I've learned from everyone along the way as well, because it's a collective, and all the different perspectives are really, really helpful when it comes down to figuring out your own personal trading style and how that works for your psychology and your emotional ability to manage risk. That's the best way that I could probably put it. I don't rehearse these things when I come on, so when it comes out in a good way, I feel like, hey, that's sort of nailing it on the head right there. So we'll get started. The first thing, what I do every night is I update my journal, which tracks my trades and allows me to create these level sheets, which I use to keep my charts a little cleaner. I just like to have my moving averages, my opening price, and then I use my level sheets to help with any other identification of levels. And the main thing I wanted to point out this morning with my level sheets is that the ES yesterday put in not only an NR7, which is narrowest range day in the last 7, but it was actually the narrowest range day in the last 200. Okay, we only had a 35-point range or so. It was sort of a perfect doji day. We also traded about, I think it was 880,000 contracts, something like that. That's about half of the average daily volume over the last 200 days. So just something to keep in mind. What does that tell us? I mean, you can sort of glean it in any way you want to, but basically we had this huge thrust up to new highs. We've digested sort of this little level up here. We put in a very sort of indecisive day, a pausing day, and these things can be huge springboards in either direction. However, what I've been talking about in my room is we've had one of the most volatile, if not the most volatile summers I can ever remember. And it's now August, and a lot of traders need a break, right? You got a few weeks left here before Labor Day and people going back to school. So the expectation for me is that we are finally going to be in a true summertime trade where, you may get some tweets and some movement, and but you also could get just a much more summertime kind of volume and range bound action, and watching the paint dry kind of trade. So we'll see if there's a lot to do today or not, but we'll kind of get into it here. So another thing I'll point out, what I like to do on my charts, you guys see me do it if you've been in here before on Tuesdays. So this is my main screen here, and what I have is a 1 minute chart of the ES here, a 1 minute chart of the NQ here, and then the rest of these are usually I have them on a 15-minute. Sometimes I'll flip them back and forth. So I do a 15-minute of the RTY, YM, NQ, ES, and then crude. And what I like to start with in my morning is, hey, good morning, Delph. Let's see who else is in here. I guess that's about it for now. But I like to start with my my ATR box, this yellow box. So what I do is I determine the 5-day ATR from as of yesterday's close. On RTY, it was 42. So I create this box to match 42 as the range, and it's just a visual representation of what the 5-day movement looks like. And what I do is I just center it on the Globex session close. And that gives me an idea of what our price movement may have done in the overnight. And it allows me to move this up and down to see if we're making a big move, how much more juice might be left in the trade. Okay, so it's just sort of like there to visually help approximate how this stuff might go. So on the YM, as of yesterday's close, the 5-day ATR is 727 points. And you can see that narrow range in the YM as well. See how the 5-day ATR doesn't change like super crazy in one day, right? So like this is going to be similar to what it was yesterday in terms of the size of the box. I do like to adjust it every day, but look at how it just shows you it couldn't even trade half of its 5-day ATR yesterday, right? So similar to ES, I guess, in that matter. I don't do my level sheets for RTY or YM just because I don't typically trade either of those. But occasionally I'll just try one or two, maybe just out of boredom, but not very often. It's more like if I have like a really good winning day going, I might just sort of mess around with something there. But so again, I center it. There's this line I center on the close of the Globex session. sort of gives us an idea, you know, what's happening here in the overnight and this morning. Yeah, I'll go ahead and do crude next. Crude is a little bit of a good example of how this can go. So yesterday, what I was showing was, try and pull this, make this a little bigger here. Yesterday, what I was showing was crude had this gap up and couldn't fill. And I started out with the ATR box centered down here on the Globex session low. But then I quickly moved it up and said, look, what if we don't close the gap? You know, you can, if I put the box here at the low, you could see, you know, if we're measuring off the gap, I was like, 82 could be your target for the day, right? And that's exactly kind of what we got there. I also pointed out that we have this other gap from a week or so ago up at the, you know, 84.5. I mean, even the true gap is maybe all the way up to the 87, right? But basically this big gap to fill. So I was yesterday saying, look, we, you know, if we get through this 82 level or so, 82.5 from here, you know, it could have a few more bucks to go easily just on a technical basis. And so you look what happened here in the overnight. And again, if we adjust our box, right now, our 5-day ATR in crude is $4.23. So I come in here, put my setting up to, I just basically, I make the box represent $4.23. And if I, again, center this on the close of the Globex session, let me see if I'm getting this right here. Yep, that's about right. Doesn't have to be perfect, but now with crude, you can come in and look at this and say, okay, we had this nice run up. We sort of technically, maybe not perfectly technically, but we kind of filled that gap up there. And now we come back down and undercut this overnight low. So now what you can do with this representation is just say, look, if the high of the day is in for crude, I can move this up here like that. And you can see where, if all it does is fulfill its 5-day ATR target, it just brings it right back down to the 80.5, 80, 40 level, something like that, which, surprise, surprise, the bottom of that level is perfectly aligned with the 50-day moving average in crude, which comes in at 80.37. So a lot of what I do as a trader is I'm trying to find ways to take advantage of where the computers might push things around to. And this is what they do. They use different mathematical type equations and calculations to, you know, push positioning, squeeze it one way or the other until it gets to a level that's overdone. And then they flip it and start taking profits, right? And that's how a lot of this stuff works. So what we want to try and do as day traders is be aligned with that order flow, or that position squeezing, if you will. No matter what's going on, no matter what the news is, just trying to have it basically, you know, align yourself basically with that bigger price and order flow. I'm thinking right here because we've got the crude NYMEX open at, can't see anymore, 82.55. So I also use this orange line to show us where our RTH open is. And then we'll get to doing these last couple here for NQ. So again, this was NQ yesterday. And what I did was when we made this high, I assumed that the high of the day was in. And look at that. It just couldn't even trade half of its 5-day ATR. So again, NQ put in a narrowest range day in its last 7, 265.25 points was the range. The current 5-day ATR is 558.5. Let's see. I do it like this, and it would be 29,400, 558.5. I center that over on the Globex session close. That's about right. And now that we've opened, I can adjust our orange line opening price. Okay, 29,839.25. Sometimes I have to do this to get it exact. As we're kind of going through this, quick glance across the board. Advanced declines opened around 220, tried to print down and are now rallying up to 420. We've got some selling in the mags, but buying in Apple. I like to say, typically in my experience, when you have a condition like that where the other 6 are red and Apple's green, it seems a little bit like a defensive posturing. We'll see how that goes, but obviously there's been some more selling in the bond markets, so yields continue to push back up towards levels that could be meaningful. Similarly with this rally in crude, again, you know, crude quietly, if it recaptures, you know, the upper 80s and starts quietly creeping up into the 90s, you know, next thing you know, we're printing over 100 again, and this thing could get very interesting in terms of the economy and the implications for Main Street and, you know, the housing market and all that, which just interesting, very interesting trade going on right now. Obviously the war. All right, so on the ES, we've got, like I said, yesterday was only a $35 range, narrowest in like a year. The 5-day ATR is therefore contracting. So it's down to 74.75. Just to make it easy, I can kind of do that, 7,700. And then slide this over. Let's blow it up. Make sure I'm getting this right. So if I center it on the Globex session close, and then there's the 4 o'clock print, and then our opening print on the RTH is, what does that say? 77.91 3/4. So I move that up. Okay. Zone it out a little. And that's kind of my process as I get rolling in the morning. And it's mostly because I tend to not just jump in right away on the open. I just don't often have, well, I don't for sure have a plan for how to trade the open right off the opening bell. I don't use a range break of a range. I've kind of played around with it here and there, like, you know, even using like a 3-minute range to just give yourself a little bit of time to kind of weigh in on things and try to figure it out. But for me, if I'm jumping in too early, I tend to get emotional and make mistakes, and it just tends to cost me money and sort of emotional volatility, if you will. So part of what I do with my process is just to give me something to do without feeling anxious about getting in the trade. And with that said, I'm in Colorado. I mean, my dad's in Reno. So when I was learning and trading with him a lot, those of you that are on the West Coast, you know what it's like. I mean, I'm not a super early bird, so I don't really wake up. I don't want to be up and analyzing all this stuff for hours before the market. Before the open, I just sort of get up, grab a couple cups of coffee, and the more relaxed and just kind of letting things come to me on my terms with my trading plan and how I do things, the more I kind of take that mindset, the more I operate in that kind of mindset, the better I do. So I try to, trade a little less if I'm over trading. I also tend to, it leads to churn, generating commissions and generating losses for me. So if I kind of have a sweet spot where if I have, if I can put together maybe 3 or 4 trades a day, that's usually a really good sweet spot. And sometimes I'll do a lot more if it's really kind of good price action and smooth chart candles and stuff like that. Maybe I'll trade 6 to 10 setups on a day, which is still quite a lot. But my main time frame for execution is the 1-minute chart. So there's plenty of setups that happen over the course of a day, especially on a trending day. And when you're in a little choppier market, range bound market, there's not as many, and it's better to set aside anyways and wait for your setups. And as lots of and have helped teach me, sometimes you don't get them, and so it's never really a good thing to force those trades out of boredom. Usually usually it costs you, but if you do, like sometimes I do like putting on just something small enough that I really shouldn't have an issue with it, with the risk management and emotional, sometimes I like to just see how it feels to be in that position. Basically, to see how it feels to be long or short, and whether the market's, being bid up firmly by the machines or the other way around. Um, and so that's kind of an interesting thing that, I think comes back from reminiscences of stock operator, that whole thing where he would kind of dip his toe, kind of see how it, you know, if the trade starts working, then try to add to your winners. And I'm trying to develop more and more of that in my own trading plan. It's a difficult thing to do. It's like how you measure whether a trade is working, how far you want it to go before you start adding to a winner and all that kind of stuff. And it presents its own problems in terms of risk management, and psychology and emotional management, because you can have a winning trade that then you add to, and then you've just risked the fact that it was a winning trade, and maybe it might not have been one that was going to turn into a runner, and instead might have been just a single or a double, a base hit, or something that when you hit a lot of base hits, you can do that throughout the day and have a nice day. So you kind of want to be able to read the market if you can, and figure out what's the potential juice in the trade. Should always kind of be doing that anyway in terms of your risk reward. Even just a quick analysis, like, what's the risk reward of being short here versus being long, and all of that. Because, if there's not a lot of juice left in it, or if you're in like a summertime trade, super narrow range, and this is what we're going to see for a little bit, then then maybe you do want to get involved a little earlier, right? Because the price discovery that occurs early in the morning in the excuse me, in the RTH session is definitely more of a price discovery time frame. You want to see where those buyers and sellers come in, and whether or not they support or resist where they should, technically. So anyway, I'll kind of keep looking at this a little bit. We now see Apple has joined in the downside action, rejected the 310 level, and pretty much have a red candle forming across the board and on the Mag 7s. Some kind of big red candles as well on Amazon and Google. The other big thing I've been talking in my room about is that sort of we have this scenario where we kind of got the broadening that we wanted in terms of ES leading a little bit, YM and RTY all going out, to new all-time highs. And even with the rip that we had, NQ really couldn't even, look at it, couldn't even reclaim the 30,000 level yet. So the question that I've been asking is, how is that spread going to come in, and is it going to come in, or will it continue to widen? My expectation is that you see either these other three sort of start coming off and maybe retest that. We should get a retest of the big breakout level, right? But, putting that into perspective, with as sort of lacking as the NQ has been, if the NQ actually starts leading us back to the downside, then the big support of that breakout level we had could be a really big turtle soup kind of trade as well, where the support doesn't hold. I mean, right now everyone's talking about it and everyone's saying they'd love a chance to buy that level again when it gets down there. But my question is, will it actually get down there? And if it does, do they really buy it? My thought is we could just as easily see a scenario where if it doesn't go down and retest that levels, that's actually indicating a much more bullish price action. And that's where maybe you have, the NQ as now the catch-up trade to the upside, right? But if it's the other way around, the NQ could lead us back to the downside. So you want to be careful here. There's a lot of indecisiveness. When you get up and have a run like we had, it can just be, a lot of different positioning happening where it doesn't mean a whole lot until, obviously everything's after the fact, right? But we want to watch the NQ and its 50-day moving average closely, because yes, we reclaimed it, but here we are, we're not that far above it again. It comes in at 536.5. And it kind of looks like we might be stuck in that zone for a little while. But when you compare where the 50-day comes in on the ES, it's 75.39. So that's what I'm talking about. Some of that disparity there, it's sort of like, it's not like a true spread. I'm just sort of putting it out there as such. But all right, so another quick glance across. We printed all the way up to 750 or so in the advanced declines. It's now kind of sagged off a little bit, currently 630. Bonds have rallied off their low in the overnight. So that's encouraging, because in my opinion, I really don't want to see these interest rates get out of hand. The fact that they printed back up above 470 in the 10-year and I think they got above 5.25 in the 30-year yesterday. That started to worry me. But then also, as well as the market held up, was I thought encouraging. So but we'll see here. Again, the doji day that the ES put in, we'll see if we're going to hold this level. So yesterday's low was 63. Yesterday's pivot was 63.25. Today's 5-day moving average 63.75. So really that's, again, it's a big level that needs to hold. But if they break it, they could break it pretty hard, especially if you're watching simultaneously, like Nvidia go down and try to fill its big gap there at 212 or so. And if you see NQ break that 50-day and start aggressively selling, then below those 63s, I'm not sure how much support you're going to see. We could. It's oftentimes in the summer trade, and when you get into more of a range bound chop, you oftentimes don't get the third, fourth, and fifth wave follow through. So when you're watching a trend develop, We've made a move downwards off the open. We had a nice pullback you could have sold into and been short. And how far do you expect it to go? Like, you know, if you're using the ATR boxes, I can show you where you want to look at for that stuff. But also often in a range bound trade, you get the one pullback, follow through, and then it's actually goes into more of a reversal mode, and they run all the stops in the other direction to the opposite side of the range. So that'd be right back up to the 7,800s, and then maybe you get some follow through to the upside, because if bonds stabilize, crude starts coming back off again. Every time we get an economic number that sort of threads the needle, and if rates can stay paused for a while, then it's just stability for the market, right? Let's see, where's the VIX trading? 15.5, up about 1% on the day. We've got gold coming in at 44.50, so it's continued its break of that downtrend. So probably got the pit bull making a ton of money, hopefully. I think he likes to trade gold on the long side, but I haven't been in the IM Pro room too much. Since I've been doing my own room, it's kind of hard to flip around and be in all these different rooms and listen to everybody. And I really want to, but it's hard to balance all that. So anyway, so far, does anyone have any questions, thoughts, comments, criticisms? I take criticism, you can let me have it. You've seen me trade like a pile of shit, so pardon my language, but you've seen me trade well, you've seen me trade poorly. The whole thing is, can you do it consistently? And it's like I still have to work on that constantly. So here's the exercise, right? If like for me, if the price is below the open, I just assume we're maybe trying to put in a red candle on the day. If it's above the open, I assume we're trying to put in a green candle on the day. So it's a very simple way of creating, some concept of bias on your day trading entries. Do you really want to be long or short here? Overall, with the rips that we've had, it makes it hard from a risk reward standpoint to be long, in my opinion. However, why try fading this thing if, so it comes back to that with maybe dipping your toe here and there. Like sometimes if I'm trying to be short and I take a stop, or if I don't feel that there's follow through, then, sometimes just the nature of what the market's telling you with that is, hey, I'm not making money on the short side, so maybe I should try it on the long side. And then if you try it on the long side and you take a stop, then you have to sort of step back and evaluate, are you in the zone or not? Are you in the flow and in the zone of the market action? Or is it just a chop day and it's just going to be like that? Then you might have to adjust your style, to more of a range bound type of trading plan, which means you have to kind of sometimes take those scary trades where you're fading the range, fading the extreme of the range. And when you do that, it's like, it tends to feel like you're absolutely going to get stopped out no matter what. But sometimes you get those entries that are, like this could have been the low of the day right here, right? We came down, tested this overnight level, it gave the buyers a spot to jump in with a nice tight stop below that. Or if this opening indication is that we're going lower, right? So this is what I do with the ATR boxes. If we decide that we think the high of the day is in, if all we do is fulfill our ATR, we don't even do a whole lot. I mean, it just kind of sweeps back down through to these 77.25s or so, right? If we continue to put in a real contracted kind of range bound summer trade, even if we sweep these little lows and stops, look, it just gets us down to that 63 or 60 level, which there's an S1 is at 60 3/4. So they could do that and then just reverse and make it a range bound day to the upside, or continue and try to press the all-time highs, because it's impressive how it's held up. So if you're doing this the other way with the ATR box, you can start looking at that to formulate where your targets might be. Like, let's say they don't take out the overnight low, right? Well, if they don't, and they decide to start squeezing the shorts again and continue to price discover on where those all-time highs can get to, then look, just fulfilling the ATR gets you to new all-time high at 78.40. And so then you can flip over to the levels sheets and try to identify other levels that might be on there that maybe you'd want to exit into if they actually try to run that upside. So for giggles, I'll just leave it aligned how I've got it, and we'll see what happens here in the next 15 minutes. I don't even have my platform opened yet because I'm not interested. It's better for me when I wait an hour or so. And a lot of people actually use that as their trading plan. I know one guy that does a first hour range. Okay. And then once that first hour range is put in, all he does is just look to buy or sell the 50% retracement of that range. That's the setup. You're seeing some expansion, right? Upside expansion along with the advanced declines. So if you pull up the YM here, so it's broken the upside of this narrow range day that it had. And, this started to look like a bit of a nasty head and shoulders reversal pattern. And it still could be, because they could reject this as resistance up here, and they could, have a measured move and sweep this thing back down. But oftentimes the head and shoulders, the lean is opposite, right? So what I'm looking at here is the right shoulder is higher than the left shoulder. That's usually not the best technical setup for a head and shoulders pattern. Usually if it's going to go lower, this left shoulder should be up here and the right shoulder should be slightly higher. And why is that? Because it's indicating that on that little rally of the right shoulder, it couldn't overcome, right? Now, sometimes when you get it forming this way is sometimes when you get everyone trapped. So, not every pattern has to be the same or perfect. But it just tells me, we got some selling, which we should have gotten. and now we've consolidated, and it sets up the move for the next leg higher if this is, just a continuation pattern back and fill and super boom economy, and here we go. So if we were to put in a trending day or just sort of a regular day, I mean, nothing about this summer has been regular, but like if we fulfill the ATR, we get right back up to the top of this right shoulder, and it's pretty close to our new all-time highs again. So I'll just leave that. But look, when you're also in an adjusted or a contracting kind of scenario, it's nice also that they have this middle line in these boxes, right? Because you can see, boom, we just fulfilled half of the ATR. You saw what happened yesterday. We couldn't do much else. So it's like sometimes that's your good fading spot. And if you expect this thing to come back down and in, then that could be a nice little spot to look for a short side entry. Let's look at RTY. Again, we zone it out a little. This sort of correction starts just looking like a big A, B, C correction. And then technically we've taken out this level, right? So that's a good reversal with consolidation and the potential for that to move on through. Pardon me. Okay, so if we're looking at this and we assume low of the day is in, we'll use the overnight low. I like including the overnight, in the full Globex action, because in today's world, these markets are trading all the time. So, sure, there's sort of the gap scenarios that occur where the market like ignores the overnight. I don't think ignores is the right word, right? Because I think what you tend to see and can happen is that whatever position squaring they were doing in the overnight, which may be just basically related to whatever European operators there are, it's like there's often this sort of, I don't know, mindset that like, oh, well, all these traders were thinking, it couldn't go higher here and it started going lower. So then they get loaded up short, and that's why they can squeeze this thing, right? Because they thought this thing was going to break and that we really need to retest 3,000. We really need to go down and retest the big breakout level. And now here they are again, squeezing the shorts, right? So whether this will follow through all the way, we don't know. But look, there's plenty of stops up here that they can buy and force more buying into. I'm not sure that could happen today, but it could. But we'll want to watch crude pretty closely, because if crude reclaims its opening print, 82.5 or so, remember, that's a kind of a big level for crude in terms of its 50-day moving average. So sometimes these big moving averages can be pretty important for positioning. So nice little reversal. Remember what I said, when it's not necessarily a trending day, you can often get the move, the pullback, the follow through, but then that's the last of the follow through, here was what would be your third wave up, and instead of following through, or here, sorry, wave one, wave two is up, wave three comes down, your fourth wave is supposed to be up, and then you should have a follow through fifth wave, and instead it just reverses, right? So now what you might get is a pullback, which you kind of got right here. And this is how sometimes these range bound trades work. Let me make this bigger. I mean, this was a pretty nice little base and reversal pattern, right? Because it came down, and look at this one. It comes down, it gives you a sort of an A, B, C correction, then the third wave down. Then what do we get? An A, B, C correction, right? Which, I mean, look at the makeup, the composition of those candles right there compared to the composition of these candles. Look at how identical that is practically, right? And so what happens? You get all these traders that shorted this, thinking this is a continuation trend entry day, and there's nothing wrong with that. That's the right trade to make on my system. The issue is, as it goes your way, make sure you lock in some profits and then respect the fact that if it then takes out this level here, you can see what happens. It can turn into the reversal pattern that everyone's looking for. Now, if you have, this is the reversal, now you have a pretty strong looking retest of this support. And these are the kinds of range bound trades that occur where you get, now you've got your reversal. This is sort of leg one up, leg two barely down, but consolidation and sideways and kind of bull flaggish. And then, yeah, you can get another, hopefully, everyone that's short now from anywhere in these levels is hoping for this thing to come back down here so they can be made whole again. But when you have something like this that then kind of, I don't know what, it's not exactly a formation I can put a name on, maybe some of you can, but this is sort of powerful price action, right? So if this is your only little spot to get out and they just continue to squeeze them, they've got all these stops to fill above these levels here and here, and then whether or not it has enough juice to get through the overnight highs is a question mark, right? It certainly could, especially the way you see this reversal and rally in Meta, Tesla. If Nvidia holds, and it's a tough one with Nvidia because you really feel like that big gap should get filled. But if it's a gap and go, I mean, how do we know? It might trade up to 230 today, Then you could have the start of this next move higher in NQ as part of the catch up of that spread action. So right now this is on a buy, a long type of trade entry is what I'd be looking for here, even though we're below the open and you have this bigger moving average which comes in and stuff. It's not really like that bigger moving average is telling us anything, right? It's just gone along in this wavy pattern. This is pretty typical rangy type of price action, in my opinion. And it still could turn into a trend type day, but we might need something as a catalyst. I haven't even looked at the calendar today. I don't think there's much on it. Let's take a look. So this morning we had business optimism index, came in pretty good. ADP employment change weekly. I don't know. I don't follow these things that well. The Red Book came in about as expected. Existing home sales about as expected. Weak again in the month over month on existing home sales. I mean, the real estate and construction industries, they're not doing great. They're really, really weak and have been in a 2-year recession here in Colorado's Front Range. It's a different story if you're talking to like my buddy who does really, really sick, big custom homes. He has several lined up where they're just like, $20 million homes. And it's like, obviously, like, those people aren't financing anything. So they don't really care. I mean, they're most likely they're building right now because it is a recession here, housing construction recession, right? So they're picking a time to move forward on their projects when they don't have to battle as much for the pricing and subs. And I don't know, if it were me, I'd be considering how long is that going to go on? How long can these rates sustain? I think that's still in my head, is why the Fed didn't hike. What are they afraid of? And at first thought, it was like, I was very critical of that. I thought they really should have hiked. And they may have missed their chance to, but they also might look like heroes later because they might be able to come back and say, oh yeah, see, the economy was on the verge and we knew we might have to cut. So that's why we waited, So here's this little level I was showing in the NQ. Now it's getting retested. And that's often the kind of spot you want to be entering on, is a retest of that level, because you can use a tight stop if you want, right? Like this right here is the controlling bar, and it got tested. They came down and got to the sort of the halfway point of that bar and then bought it, right? So we really should not see this thing come back down even into this, through the high of this little bar right here, in my opinion, right? So if you were trying to buy the NQ there at the 750 level, you could do a quick little glance at how much movement it's had over the last 5 bars. And your 750 level with a 20-point stop stop would be right below the high of this big controlling bar, right? And when you look at that as a setup, you kind of think, oh yeah, that's a stupid trade, because absolutely that's just going to get swept and stopped out. And you're right. Often that's exactly what happens. But when it doesn't happen, as you're seeing right now, they bought it and moved it straight up. You took hardly any heat on the trade. You could take off a couple legs and have one as a runner if it goes. And if this one goes, what did I talk about? Wave one, wave two, wave three. So you should be looking for some kind of measured move, of 110 to 150 points off the 750 level, takes the NQ up to the 900 level, and then if you're getting up into the 900 level, you're taking out these overnight lows. So you might actually get a thrust back up through to 30,000, And if they're simultaneously selling YM, see how that thing rejected? Now it's coming all the way back. If they start selling YM and RTY, that could be their fuel for the rotational trade and purchasing some of the techs again. We'll see. Looks like it might actually fail here based on how ES is sort of failing, but this could be the retest here in ES where we got it here. We'll see which one kind of holds out, right? And then I'm still always kind of watching NVIDIA, right, out of the corner of my eye, because whatever the news was yesterday on that, I didn't even read it, right? But like, they could still sell it hard today. I mean, technically, they probably really want to. And there's a lot of buyers lined up at that 212 level, so if it can get there quickly, which, easily could, they should go piling back into it. And here we have crude, trying to push back up towards the open. If you simultaneously start seeing bonds sell off in a meaningful way again, then be prepared to bail on your longs or get short. You could be trying a short right here if you think that this thing really needs to keep going lower. You could be trying a short right here with a tight stop. See that? A 3 or 4 point stop. It's sort of beautiful when you can find those setups, right? Because especially in contracting ATR markets, when you don't get as much range, if you're trading for a goal and you're trading to make a living, then look, sometimes you got to put on a bigger position. I mean, I know it's scary and everything else, but what you want to be thinking of it from an emotional and psychological perspective is the opportunity of it. What's my opportunity? And then manage the risk that way. And so like when you can find a setup that really gives you a nice tight stop that you can be confident and comfortable in, that hey, this is a setup that should not break this level. I mean, on a range bound type of trade, summer type of trade, you may need to put on a little more size or double your position or whatever, and then and then scale out of it. Even if you're scaling out of it like quickly, it just really, it can really help you capture some daily profits, even on days that aren't really doing a lot. All right. What do you guys think? Which way is this going to resolve? Maybe nobody's listening. It's okay if you're not. I just do this anyway. This is part of how I analyze my own action and willingness to get involved and everything else. I think you've got it set up here to go higher. So personally, but my system has me still technically looking for a short because we're below the open. This moving average is sloping downwards. This one's trying to roll over, right? It's sort of sloping downwards, but it kind of requires real sell pressure in order to have this turn down. On the longer time frames, my bias is more long. You know, it's you've got all the moving averages on the ES. Everything's sloping up. Long bias, basically long filter. On NQ, same thing. On the CL, it was all sloping down and short bias, and now we've got a 5-day that's turned a little flatter. So we've got sort of a cautionary both sides. This thing could go either way. See if NVIDIA can reclaim like 221 level. Seeing a little pullback here in bonds, but it's still pretty strong move they had, reversing the overnight. Between those. All right, so this is a nice little formation, right? So it tried to probe a little deeper there, rejected, came back up through, now is giving you another pullback. This is a good one if you're thinking it's going to go higher, because you can buy this in here with a tight stop. And again, it could easily just flush you and stop you, especially when it's choppy and range bound. But when you can find these little setups that give you a tight stop, it's kind of cool, because if you want to trade with some size, you can do it. You can keep your risk sort of static in terms of like a dollar risk amount. You could put on, a few more contracts if that's your lean and you like that setup. It could be a really good one. But look, the the NQ already negated it, right? So technically speaking, if you thought that was gonna become a spot that they were gonna buy, they technically shouldn't have gone down and printed below that level. But remember what I said, this right here for me is the controlling bar. So if all they do is trap some stops right there and now they buy it, that can happen too, because these things can manifest in different ways. I am seeing, YM sort of eyeing whether or not it wants to hold, and does it come down here and test the open. That could be good. you know, from a rotational perspective for NQ and ES, but we'll see, because on the crude chart, crude's looking like it wants to come back up in here and retest, you know, this pocket on the upside. So that could put a little bit of headwind in on what's happening. These other markets. What else do we have today? Household debt at 9 a.m. in about 27 minutes. That actually could be market moving. It's not something that probably most of the time they look at, but it might be worth paying attention to that. Some kind of measure on how the consumer is looking. Tomorrow, mortgage apps. CPI. So that's, I guess, the other reason we're in wait and see mode is what's CPI going to do? What are the crude inventories going to look like tomorrow? I also have a 10-year note auction tomorrow. So yeah, it's probably going to be hard to do much today. But, you know, the other part to that is the more kind of sideways we are throughout the day, then the more likely you could get, you know, some position squaring type of move, some, you know, some real trending in the afternoon, just on the fact that if anyone's nervous about their portfolio and they need to square something up, you know, they're going to want to do it in this afternoon session before just waiting for CPI tomorrow. Sometimes, right? They don't have to, but sometimes that's what you can see. So not kind of giving up on what we might have for opportunities today. You know, it's like Dad says, and what Ben Lichtenstein used to say is, you got to be here. You know, if you want to, if you wants to be here for the good times, you got to be here all the time. Ladies and gentlemen, my Ben Lichtenstein. Impression. That was awesome. I mean, his service was so fun to listen to and really helpful when the pits were still trading. We were transitioning to, you know, they were trading the big contract in there and he was calling out the action, and you could hear, it was so cool to hear him say, like, you know, here comes Goldman, he's a buyer, you know. It was helpful, you know. It was helpful to see or to hear and have a read on, you know, where some big paper was coming in. That's what's tough about electronic age and being a screen trader and trying to figure that stuff out. There are various things you can look for. Like you can look for big lot orders in the order book, and you can try to gauge whether or not they're real, or you can try to monitor if they actually trade through them. Or sometimes, you know, more often, I think, you know, oftentimes you see those big lots get moved, you know, so they're, even though they're not supposed to be doing it, they're kind of spoofing it a little bit. When volume is really flying and we have a really good, amount of trading and volatility and, big trending days and stuff, then you can see those big order lots in the book, and you can get a sense for whether they're chasing price or not. And it can help you in terms of entries and exits and stuff, because sometimes you can front run them. You're not front running them per se. But if there's a big 1,500 lot offer and you're trying to sell as well, you can either sell just a point or so in front of them, or you can see if they take it out, and then that could be an indication for you that hey, there's real appetite. So we've got this rejection in the YM that's looks like it's going to print the opening print again. So let's see what happens if they use that as the rotational fuel and we get a thrust up here in the ES and NQ. Probably have to see NVIDIA hold this 218, 219 level, because if NVIDIA starts to break, then I guess, these markets break a little for sure, but maybe, who knows? Yep, choppity. A quick look at like the Fed Watch tool. Now it's almost 50-50 in terms of the September meeting and whether they hold or hike. They're not pricing in a cut at all. So that could just be a little overhead resistance formed in the market there. If the market really thinks they still just have to hike and will at some point soon, imminently or whatever, but see what else we can look up here. What about the fear and greed index? Fear and greed index currently at a 64, which is in the greed column, but not extreme greed, but I don't know. Just something I look at every once in a while. It's not like I formulate any real concepts on that. All right, so from a technical level here, we came down and sort of invalidated that this level should hold. So if this becomes a short entry, which it could, we're testing the VWAP, it looks like. Yeah, I think I just missed it, right? That was what happens. Sometimes you look away for a second, and then there was a good entry at 82, presuming that it breaks this level now and flushes. Let's see how NQ is holding up. And so if you look across and start seeing, like, you know, Mag 7s seem to be going bid again, right? Like, again, it's if NVIDIA can hold, seeing some green coming in on Apple, Google, Tesla, Microsoft. Meta's had a ripper, you know, and it is still holding up pretty nicely there. But got crude getting closer to its opening print. We also have 1 minute left until the close of this 15-minute candle. Currently, I'm playing around with our Trader Pro and some of the different things you can look at. Like, if I wanted to try a short entry here at this bigger moving average, 86.25, with a tight stop above this level, 87.25. This is pretty neat. You can put this in here. Oh, wait, what's happening? Oh, I still have 10 more seconds. I put it on restricted until 8:45. So let's see, 8:45. Now I can put this in here. And one thing that's cool now is I've got this QP, which is, I don't know why it's position of Q or top of Q. So, but basically what it's showing me is there's 85 offered at 86.25, but this is the ask count. So if I think I'm understanding it correctly, is there's 36 different offers comprising 85 lots. And I'm number 34 of those 36. And then it's kind of showing me, I think, how many are getting added behind me. So there's some other offers coming in here at the 86.25 level. I don't know if it's something I can actually use, but it's kind of interesting to see. But again, this could be a little rejection here. So it's like, do I really want to be trying to short up here if they just are now resuming kind of a little upside thrust? And the answer is, who knows, right? I can only just try to evaluate and see if there's any spots here and there that might be good spots. What I'm watching closely is NVIDIA now can't seem to get bid, right? It acts like it wants to go lower as I'm looking at it. That doesn't mean that it can't go lower and that the market can't go higher. But if you take a quick glance at, say, you know, Amazon and Google, and you look at how they kind of rallied, and now if they start selling them here, See if Nvidia holds. It looks okay now. Looks like it's trying to hold. So I've got 14 offers that came in behind me at this 86.25 level. And let's see what happens here. There's 100 lot just below me. Now there's 22 others behind me at that level. So there's 100 offered, couple hundred lots there, two or 300 lots coming in. So those are probably longs trying to take profit. And I would expect I get filled and get stopped out, but now you're seeing some bidding coming into Nvidia. But can it hold or does it reject? Yeah, that's too bad right there, you know. That's what happens sometimes, but now if it goes back up there, I don't think I really want it necessarily, right? 'Cause this could now be the buying level where they take it on through. There's still 100 lot there, but that could be something they sweep right through. It looks like they want to on the NQ, but I'll just leave it in anyway. What the hell? But now see with those bars thrusting upwards, it creates the 1 minute trying to curl back to the upside. So really, this is kind of a cautionary spot here. It's not that high probability of a trade or anything. Could be sort of stupid, but we could also get NQ rejecting off of this 15-minute moving average. So sometimes it rejects it hard and sometimes it goes right through and becomes a big reversal. All right, I got it at 86.25 short. So what happened right there is I have that set up that if it ticks just 6 ticks my way, it just moved it to break even plus a tick. Because what I want to see right here is I want to see this hard rejection now come straight down and through. I want to see them just absolutely trap all the breakout traders from the long side. And, you know, whether or not the lows could be taken out today, I'm not sure, but they could be wanting to just sag back down and into the 50-day moving average on the NQ. Actually, you're seeing some bidding now in NVIDIA, so chances are NVIDIA rallies and this thing goes back to the upside. But I'm just going to look quickly here at where's the pivot on NQ is 822 and a quarter. So oftentimes they'll sell that pivot level, and if they sell it from below, which now they're not, right? Looks like NVIDIA is going to take us higher and through. But yeah, the rejection that you want to see formulates in terms of several red bars in a row coming in on the 1 minute. So this looks more like a long side continuation pattern. So there, I'm stopped at basically break even. And here's NVIDIA reclaiming 220, it looks like. So so now what you want to watch for here with NQ is the pivot level. It at 822 and a quarter, it often is either the level they really sell hard or they really buy hard. So look for that thing to get reclaimed, and then they have plenty of fuel to run the stops to the upside. Let's see, where's the pivot on ES is 79.5. So that was actually a really beautiful retest and hold of the pivot. But look at what's happening with the crude market, right? Back up through the open. And you're seeing a little reversal maybe happen in the bond market. So this still could be a good short off of this 15-minute moving average level. But the conflicting issue there is NVIDIA, in my opinion. Right? Look at NVIDIA now, 220 and a half. So see if NVIDIA can hold, and this could be the right long entry trade. Let's see, especially if crude rejects the opening price, okay? So maybe what I'll do is try a little, I'll just try one here, what the heck. You did just see a little drop in the advanced declines back through this 540 level. I don't know if the market really likes this crude trade going higher. I'm not taking this long. I think I want to wait and see what happens with this crude trade. I might try it short again here. Okay, so now come back down through, and if this 1 minute starts printing red hard, then you should have this moving average start to roll over again and point lower again. And you could have a good reversal entry signal on the short side, but right, I guess I could have tried re-entering that position there, but anytime I get stopped out, I'm wondering, right, like, why does it not give me the price action that I want? So I try to just respect that. For whatever reason, buyers came in, they pushed it up in there, they couldn't get through there, so now buyers could be trapped. They're the ones that can come in and sell them hard. But look at what happened just now in crude. It rejected back hard down through. I'm going to try this again at the VWAP if I can get one more shot at it there. On the long side, that's based on watching crude kind of reject, seeing some buying come back into the bond market. It doesn't mean we're going to go higher, but you could also put it in as a buy stop above these levels. And what you're looking for is joining in your timing, joining the juice, whatever that juice becomes in terms of the sort of market flush, right? And I always have a hard time trading long for some reason. Well, not for some reason, because I learned how to trade in 08 was when I first started. So sometimes I have to just force myself to try the long side action. All right, I'm filled at 82.25. I'm not sure it's going to work here at all. Kind of looks like it might fail pretty quickly and hard. Probably, yep. Just taking quick stops on these. I might try it again. above the VWAP. Let's see what happens. Looks to me like Google wants to rally, so maybe if Google can get back up to its opening print and we get some follow through with NVIDIA, okay, testing this level here, 78.25. Crude back up through its open. And we're getting some down ticks. 500 down ticks. Sometimes a good place to buy. Cancel these. I'm trying one long here at 76.75. This doesn't feel right though. Okay, we're getting 600 down ticks, but we're not getting a true break yet in NVIDIA. So I kind of want to try this one more time. I'm sort of fighting it, but I'm trying to trade it as if it's a range bound kind of trade, and it just might not be. Now NVIDIA looks like it might want to join and go lower. I don't really want to sell it now though, but I should probably in case it breaks. Amazon broke pretty hard. Meta's breaking. If I can get out at, if I can get a short now at this level at 77.5, that might be the right one, but they could also then just trap everyone. Man, I'm not trading well today. See what happens. This doesn't feel good right here. I think NVIDIA is about to break. If it does, I'm gonna get smoked. So I want to see if I can get this retest to the 76s. Come on. Chasing it. But I'm not real comfortable with where Nvidia is trading right here, and this thing could get a little bit ugly. If Nvidia tries to close that gap at the 212 level. See if I can get a sweep down to the 60s. Why I'm testing its open here. Nvidia is trying to hold, but can the ES break that 63 level? I added one, but that might have been a mistake. Yep, I think that was a mistake, but we'll see. If NQ starts to join on this, then they should retest, or they should test that overnight low and the 63 level, and there's obviously a lot of stops down there if they can take it out. But Nvidia looks like it wants to hold now. Yeah. Stupid trading for Bozier here. Was not patient at all with that one. And then chased it. Damn it. Come on, Bozier. Now, can they sweep them or not? I know they can, I just don't know if they will. Ah, too nervous there. That was when you don't get the price action you're looking for. You gotta be careful. Because it's like Meta's trading back up towards its high here, so and Nvidia could not really break that heavily. I'll see if I get lucky on this one. Doesn't feel like I'm going to, though. Trying it the other way. Based on Nvidia and Meta, I'm trying it long again here. Could be stupid, but yeah, that's stupid. I'll tell you why it's stupid. I'm not using my stops here. Hi, Zobug. Hi. My first target on my long is 75 3/4. Just a little. a little stop run back up through those levels because it's just so easy for them to do that kind of stuff. But now we're really not getting any buying. So now crude looks like it wants to go higher again. Yeah, I think I should probably be on the other side of this. Oh, why do I chase the market? I know better than to chase. I also know that these can just go straight back up, so it's sort of frustrating. But this is not good when I'm seeing with crude, so fuck. Closure, come on. That's not how to do it, guys. Not how to do it right there. That was the entry right there. I think the 70 3/4. And now if they sell them hard, they could flush them. Yep. There wasn't much difficulty with that trade. I just freaking made it difficult, didn't I? So remember what I talked about with low volume, tight range, doji day on ES. But if we look at this now, and just move this ATR box down, if the high of the day is in and we fulfill our ATR, we can trade back down to the 77.20 level, right? 63 kind of opens the door to run these stops, and the support really comes in probably around 49s, 50s. You know, these previous highs, but there may not be a lot of buying there when you consider how much they could flush it through, you know, and get back. You know, they want to get it back down to that breakout level. It's just, can they, at what point? So if I can get this filled down here at 59, it could be stupid, but it also could be a good triggering event. So like, if what I want to see is if they sell into me here, and I want to see those sell stops actually trigger in a meaningful way. Remember, the NQ has 536.5 as its 50-day. Right now it's trading 690 or so. So it got below its low from yesterday. It has an S1 level of 660.5, S2 level of 557. So these numbers are all pretty condensed, because when they have contracting range type days, all the pivot levels and stuff start coming together and getting more and more condensed. And so then it's tricky when they start expanding stuff to a higher volatility. Let's see what the VIX is doing. VIX traded down to 15.25, is now upticked slightly. Advanced declines are back to 370. Let's see if they can just go negative on the day. I want to be careful of the look below and fail as well, right? Is everyone going to pile into this? If it comes down here and then reclaims 63, I'm not sure they have a reason to on this type of occasion, but I'm often wrong. I had the perfect entry up there at the 86.25 level, right? $666 on the NQ, the doubles. Again, the big question for me is, can NVIDIA go back down to that 212 gap, fill that gap? And then will we also see crude continue to rally here? Whatever news is coming out, I don't know if it's news or not. Could be just position squaring, and the algos that know they had some stops down here, but you know, when we trade below that yesterday's low and we can only trade 3 ticks below it, that's a question mark, right? Does that mean that it's legit gonna hold? I mean, that could be, because there weren't any sellers coming in. If you start to see NVIDIA break and take another leg lower, and look at crude, seems like it wants to take another leg higher here. Could be all the selling they need to do, you know? I don't know why, honestly. I thought I had my, I thought I had my setting at like $300 as a daily loss. So I don't know why I can even am still in this. Let's see here. 60 3/4 is S1. So below that could be some good stops. Then S2 comes in at 44.5. Feels like it could be too easy for them to just reverse it here, but also I just don't know. Like maybe there's too many nervous longs ahead of CPI. And now that crude has kind of gone bid again a little bit. Amazon making a new low. Google is very close, testing, kind of. Nvidia's testing. Starting to buy Apple. Microsoft down near its big 500 level again. Seems like it's holding up, but there's still a lot of time left in the day too, so Google made a new low there. Advanced declines seem to be holding. Well, this is probably about it for me. Yeah, Stuart, pretty much. I try to also like post a little schedule of kind of my expectation of what I might be doing for the day and stuff like that. I didn't do that this week yet, actually, so that was sort of my bad. But yeah, I try to just be in there and talk through my trades, and like you'll see me get nasty when I'm doing stupid shit like I kind of was doing, but um you access it here, so you'll get the I can post the link and stuff, and then you do the sign up, and then it's just like having a tab in the IM Pro. Um, you can access it on my website too. I'll post both of those since I'm probably gonna give this another 5 minutes or so and then shut down the stream, and I'll continue over in my room for a little bit. I definitely need a break. I haven't really taken much of a break. But you see how I can get flipped around and emotional and flip in my position. It's never good, you know? It's better to be just like, look, if you want to be long sided or whatever, just pick a side for the day, or be biased, like I was saying. You know, we're below the open, so the sort of the bias is that the market is trying to put in a red day. So why was I getting too bullish down in there? All right, let's see if we can just get a little bit of a flush through here or not. If not, I should cover this, 63. See if I can get one at 51. They're kind of vulnerable here, and the algos know it. The sell stops are there to take out. So remember, it's not, if the buyers don't step in, it's not support. And when you have the breaks of these doji kind of conditions, they can be pretty serious. I mean, I'd like to just see if it can at least get 58s, right? But without maybe Nvidia starting to sell off harder here. This could just be the turtle soup, the look below and fail trade. The advanced declines are now moving back to the upside. I'd like to see where this 1 minute candle closes. And obviously I'd like to see it close lower and down through. $666 again on the NQ. Nvidia looks like it's eyeing for lower. All right, well, I wish I could sell more here, but can't. If it goes lower without going against me, I probably could, but kind of looks like now they just want to squeeze me. Maybe that's our last little oomph, and now maybe they'll run them to the downside some more. Doesn't feel like it, but see if crude can make another little push. Damn it. They're going to reverse this on me, aren't they? Oh, you guys, why? Fuck. I had no choice. If it breaks that level, it could go right back up to the 78s or 88s. Yep, and now it's going to collapse. Once you get out, it's oftentimes you're getting out right at the wrong spot. That's why if you're patient, you're finding your right levels. You're getting in when you should be. I don't know what happened with my setting. So like I said, I thought for sure I had my risk setting for a smaller loss. Now I'm gonna have to probably like put some more dough back in this account. Unless this thing just collapses for me here. Which could still. Now you've got NVIDIA. You couldn't really rally like I thought it was about to hold and rally, so they could have everyone trapped. NQ. You're getting YM and RTY rallying, so who knows? Okay, anyways, let me give you these links, and then I'm going to call it. Here's okay, and then here's my all right. All right, guys. Well, that's going to do it for me in here for the day. and wish everyone good luck and a great day tomorrow and the rest of the week. And we'll catch up with you then. Cheers, everybody.